Hello and welcome to TA for Traders. Today is Thursday the 30th of March. I'm Nigel Croft. In this short video we'll be looking at the charts on the gold price. We'll be looking at the daily, the 4-hourly and the weekly charts, and I'll be showing you what a technical analyst would be looking at in these charts, so hopefully to give us some idea of the price action that should be coming shortly. Thank you. So on the daily chart, which we have here, you can see that on Monday the gold price went up to this downtrending red line. That is the 200-day moving average. The fact it's moving down is seen as a bearish sign for the medium-term picture, and the fact that the market went up to it and then came off, many technical analysts will be taking as a negative sign. And what do we expect from here? Well, you can see today's a bad day. We've got a long candle on a which is red, signifying a movement down, which is bad. It looks like we're going to be closing today towards the bottom of the trading range. Immediately below here, there is support from earlier in the week when the buying pressure took the market up to that 200-day. That's around about 12.42. That will give support. Below there's the 20 and the 50-day. The 20-day is the yellow line and the 50 is the blue line, both moving up, both round about the 12.27 area. They will give support as well. What else would technical analysts be looking at on this daily? On the RSI, they'd be slightly concerned that it's losing its momentum. They'd be disappointed that even though the market got up to the high levels that were seen at the end of February, that the RSI didn't get as high. And they'll be disappointed that the MACD looks like it's rolling. So really, given what happened at the 200-day, they would be expecting these supports to be tested. Looking at the immediate short-term picture, so here each bar represents 4 hours trading, and the yellow bar now represents the 24-hour average, the blue bar the 54-hour average, and the red line the 204-hour average. You can see that we did find support on the 20 average, and we then fell down towards the end of trading yesterday, and then today we found minimal support at the 50, and we've fallen back below there. There's a bit of a rally ongoing at the moment, but people will be disappointed that we didn't hold around the 50-day. There'd also be disappointment from technical analysts in that the RSI on this 4-hourly is definitely showing negative momentum. It's also gone back below 50, which is a negative sign. And the MACD as well, a few hours ago, rolled over with the short term below the longer term, which is a negative sign and another sign of negative momentum. So really, on this chart, you've got the support there that we mentioned previously on the daily. If that doesn't hold, you would expect it to come down to towards the 200 4-hour average, and that's at 12.33. On the longer term weekly picture, here the RSI and the MACD don't look as bad because the picture's only changed on the chart really in the last couple of days, so it hasn't come through on the RSI and the MACD on this chart. Each bar represents 1 week here, but what a technical analyst would be disappointed about would be the picture that we're getting on the end of this week. Let me focus in on the last few weeks. And you can see here, this is this week's trading. You can see that we went to above last week's high, but it looks like we're Thursday night now, so the end of trading is tomorrow. It's looking like we are going to close, unless there's a rally tomorrow, we are going to close towards the bottom. and this is a hammer picture, which is negative. It could actually, you could even call it a shooting star negative formation, given that the whole body is above the body of the previous candle there. So they would be looking at that in a negative fashion. Just scanning out again. Elsewhere, I mean, the blue line, which is downtrending, that's the 50-week moving average, which really equates to the 200-day, which we saw that we'd moved down from on Monday. And as I said, MACD and RSI not quite as bad on this, but certainly they wouldn't be happy with this hammer formation that's forming from today. On the support resistance levels, these relate to the daily chart, by the way. So the resistance at the 200-day, 1259.35, and then on any rally above there, which looks doubtful at the moment, 1263.94, with the support at the 20-day, 1226.93, the 50 days around that level as well, and then the next support below there is seen as 1197.29. So that's been TA for traders, looking at the gold price. I hope you found it interesting. Please remember that this is just my opinion and it's for educational purposes only. And to that end, please do read the disclaimer that's coming on the screen. I'll be back shortly with a video on a US stock and a UK stock, so please do stay tuned. Thank you.